So technically, yes, I do believe that we are going to see us hit that high again and probably go well beyond that.
Hey everyone, ready to challenge what you think you know about gold and silver investments? Lynette Zang is here to reveal some jaw-dropping truths about ETFs like GLD. Spoiler alert, owning shares in a gold ETF doesn't mean you actually own gold. Discover why these ETFs are diminishing assets and the hidden forces at play in the spot market. Buckle up, because there's a lot more going on here than meets the eye.
Quite frankly, the average daily trading volumes, well, guess what? Gold is the second most traded intangible asset because they're trading contracts. That's the spot market. We'll get more into that in just a second. But gold liquidity includes estimates on over-the-counter transactions, so OTC, and published statistics on futures exchanges and gold-backed exchange-traded products. All of these are intangible. My personal preference is tangible, because if you don't hold it, you don't own it, regardless of what your perception is. So that takes us to the spot, because the spot market really only reflects trading demand. That's it. So here is the most current spot market chart that I pulled on 6/27/24. And people might be saying, well, why is gold going down? Why is silver going down? Because it was a little overbought on a technical basis, but still remains severely undervalued. So back in October, it was at 1823.50. Guess what? Hit a new high April 2024, and then again, right? So it's broken out and it is simply correcting, because what you're looking at here are the moving averages. So what they do, there's your short-term cup, but every day they total up where gold closes for 200 days and then they give it an average. And they do that also for the 50-day moving average. 10% away is a lot. It's still, even with this little bit of a correction that it's had, it's still 12% away. So think of it like a water skier. There's only so far one way or the other that you can go behind that boat that's driving you before you come back to center. But that's just technical. They can create as much gold as they want to. That does not nor ever will exist. So now we've broken below the 50-day moving average. It's not a big deal. I don't personally really even care that much about spot. I only do because you do. But another way, and this is designed to move along with spot, is the ETFs. And a lot of people go, well, I'll just buy GLD and then I'll own gold. No, you don't. You own shares in a trust. So let's look at that, because what GLD actually is, or any gold ETF, or silver ETF for that matter, is a diminishing asset. The red line is spot, the blue line is GLD, the net asset value of GLD. It is designed to mimic the spot market. That's purely what it's designed to do. But you can see where the blue and red line converged over here, and then over time they started to separate. Now there's a pretty wide separation. That's because they sell off holdings on a daily basis to pay their ongoing fees. You do not own or have access to the underlying metals. And it is, as I said, a diminishing asset. But what's particularly interesting that's happening right now in the spot market, typically the ETF flows, money going in, money going out, can determine the spot price. But guess what's happening now? There is a divergence, and we are seeing the spot market continue to go up even with heavy GLD sales. That is a pattern shift. That tells you that there's something more that's happening in this market than just kind of meets the eye. But here's something else that goes on that you're not really seeing at all, and these happen to be the notional derivative contracts, the derivative gold contracts in the FDIC insured banks, right? Look at 2023. This is 2023. This is the full year for 2022. But in 2023, they had so much buying and selling of these contracts that it dwarfs anything and is easy to manipulate the prices. People always want to know, well, why is gold going down? Why is silver going down? Because they can create as much gold and silver that does not nor ever will exist as they want to, and it is cheap. It is cheap and a leveraged way to control the price and keep you blind to what's really happening. This graph starts in 1970 and it goes through 430 of 24. You see a consistent series of higher and higher lows. How do you know it's a bull market? When you see higher and higher lows. Because as long as you keep getting those, I guarantee you will get higher highs. It's just the way it works. There's 74, that cup breakout. So this is when this whole thing started. There's another cup and breakout. Here's another cup and breakout. And I want you to particularly pay attention to 1989. I'm going to come back to that. But once 1989 and 2000 hit, what do you see? You just see an upward trajectory going into 2008, right? And then you see another large cup formation, and guess what? There's your breakout, baby. That breakout happened in 2022. Okay, not 2024 like we've seen in the spot market. That tells you that the smart money recognized it much earlier. They began to quietly accumulate, and I mean, they've been accumulating right along. Why? Because they know they want sound money in their portfolios. Again, the safest classification. Why do I call this the safest classification? Simply put, because if they choose to do an overt confiscation, and make no mistake, price manipulation is absolutely confiscation. But should our government choose to do another overt confiscation, another one, they have to pay you market value. Well, they do that because bullion and GLD and all that other stuff is about the spot market. But this is a completely independent market. It's not worth it. This makes up less than 2% of the total gold market. And they are not going to take each coin and value it to pay you fair market. Who knows more about what's going on? Look at where 1989 was there. They know what's going on, so they just keep buying the 1%ers, the guys in the know. Whereas this market is severely below the 1989 level. Will it get back there? I can't guarantee it, but technically, I would say yes. This is a huge cup formation. Lower price collectibles are still well below the fundamental value of an ounce of gold. So as long as I know that, that's why it's so important to identify what that is, because that's where it's likely to go in a reset, right? Where they take this stuff that has no intrinsic value and is used in one place, and they revalue it against this stuff that is used across the entire global market, has the broadest base of functionality and the broadest base of demand. So technically, yes, I do believe that we are going to see us hit that high again and probably go well beyond that. It's being in the right place at the right time when this next crisis becomes obvious, because it's already unfolding. So it's not something I'm waiting for, but it becomes obvious to everybody.
Thanks for watching. If Lynette's revelations about gold and silver ETFs blew your mind, make sure to hit that like button, share with your friends, and subscribe for more eye-opening content. Stay savvy and informed, because in the world of investing, there's always more beneath the surface. See you in the next video. Thank you.